Okay, welcome, ladies and gentlemen. I'm delighted to say we've got another Microcap fund manager interview, and we're being joined for the first time by Rob Miller from NAOS. Rob, how are you?
Mark, good mate. How are you? Thanks for having me on.
Yeah, thanks for joining us. Good to get somebody new on and some new insights. I think on definitely on one of the companies. One of the two today, they actually haven't presented Coffee Microcaps. The other one should be very familiar to people, Coffee Microcaps. But before we kind of get into those, for anybody who doesn't know NAOS and kind of the investment philosophy that you guys follow there for the various list investment companies that you manage, maybe just a quick overview of the NAOS business and its kind of investment philosophy.
Sure. So yeah, firstly, thanks for having me on. A quick thing about NAOS. So I suppose we're a specialist in the small micro cap end of the ASX, and we also do NZX. But we've been doing what we do for over 10 years now. We're very much specialists in this space, and we focus our attention on businesses in terms of the investment philosophy. It's very much a quality over quantity focus. So we are very concentrated in what we do. We're very much long-term investors, so we typically don't invest in any particular companies unless we take a 5-year plus view when we're entering into those particular positions. We're very much focused on alignment, both in terms of management and board from a shareholder and equity point of view, but also just throughout the business in other ways. And the way we think around our approach is more to be a partner than just simply a financial sponsor. So often we take very substantial positions within the businesses that we hold. You know, it's often that you'll see us with 20% plus of some of the underlying companies that we invest in. We very much ignore the index type approach with the companies that we operate in. So we're not looking, we're not looking to replicate the index in any way, shape, or form. And I suppose the last thing is the structure that we operate in from in terms of our investment vehicles. They're listed investment companies, which are obviously listed on the ASX, and we operate 3 in that space, all with the same investment philosophy, but just with slightly different market cap lenses within the different buckets there. So that's very much our kind of high level philosophy and what we do. What type of businesses I suppose we look for when we're actually looking to deploy capital? Looking for things that are simple to understand first and foremost. If we can't explain it quite easily to someone in under a minute, then it's probably too complicated. We have a strong ESG focus in what we do. We're likely to be a certified B Corp business. So not only is that a negative screen, but there's a lot of positive screening factors and work we do behind the scenes on that approach as well. We very much look for companies that have strong industry dynamics. So they're growing where their growth is happening. So we do a lot of work around what tailwinds are driving certain businesses. And finally, they've got to have a competitive advantage and led by a management team that can continue to grow that competitive advantage over time.
Okay, great. Well, let's get into the first one, and it should be no stranger to anybody who's followed Coffee Microcaps for a while. Big River Industries, ticker code BRI. We actually had the CEO John Lorente presented our Sydney conference just a few weeks ago, and they've been pretty regular presenters. But for anybody who mightn't be familiar with the Big River business, maybe just give us a quick Big River 101 in terms of kind of what they do, because the name is a little bit misleading to what they actually do. You can't really derive what they do from the name.
That's a good point, actually. So yeah, Big River, it's actually a business that's over 100 years old, based out of Grafton in northern New South Wales. There's a river that flows through Grafton, and that river is kind of the inspiration for the name of the company. You're probably right. It may not be appropriate in some instances, but very much it's a nod to the heritage of that company. What they do in very simplistic terms, it's a building supplies and distribution business for the B2B space only. So not like yourself or myself going into Bunnings and buying a length of timber or something that we need for our own renovation at home on the weekend. It's very much focused in the trade only sector. So they cover a wide range of trade focused customers. They've got over 9,000 accounts across 20 odd sites across the country where commercial buyers are going into these particular sites or getting deliveries for any sort of building supplies. A lot of it is timber related, to do with formwork, a lot of timber paneling and architecture paneling. It's used by all sorts of end industries, including obviously commercial home builders, apartment builders, the infrastructure sector, the civil sector, and also the alterations and additions sector. So they do have a wide variety of customers, I should say, across the country, all trade focused and with a lot of end industry dynamics there. So there's quite a spread across that particular business.
Yeah. And, you know, as you say, it's kind of been around for a long time. We've even, you know, had the previous CEO, Jim Binden, present, you know, going back in there. So it is a business that has been kind of on the ASX, as you say. It's over 100 years old in itself for a while. But, you know, given it's been around for a while, you know, kind of what attracted you guys to the business, or, you know, maybe just give us, you know, some of the investment thesis around, you know, why you invested in Big River.
Yeah, sure. So clearly it is over a very old business, but it's only been listed on the ASX since I think it was mid-2016. It was a family-owned and operated company for the best part of that 100-year history. Then it had a brief period of ownership under a private equity business, and then it came to the ASX. In 2016, as I said, we were investors at the IPO. It's very rare for us to be an IPO investor, but we did a lot of work around the management team and the business and got comfortable, and we've been there ever since and have provided growth capital along the way. What are some of the fundamentals that we look for? Capital light business. It's very scalable. The end markets are large and they're growing. And we think it was a very competent management team, and still do, with the new CEO there today. So there's many aspects, I suppose, that went into our thinking. The diversification of end industries and end customers, so you're not exposed to any certain particular, customer movements in terms of one movement or the other. It's such a large customer base, and they're very much specialist in what they do and built up a very strong reputation over a long period of time. So there's a lot of factors that drove us to invest in this space. And also, if you look at, whilst history never repeats, it does certainly rhyme. And we've seen on the ASX specifically, you've seen a lot of success from the companies who have had long histories in the commercial, I suppose, building construction space in terms of supplying that. You think of the Reeses of the world, started many, many years ago with the Wilson family, and they've grown that very sequentially over an extremely long period of time. And whilst we certainly can't sit here to say, and Big River is going to be the next Reece, we're certainly not saying that, but we think there's hallmarks of what have been done very successfully at Reece that can be applied to other businesses if they follow a very similar and methodical path to growth over a long period of time. And Big River is certainly doing that today.
Yeah, and I think, John mentioned at our recent presentation, they're looking to grow the business. M&A is also, I think, something that he talked about. Maybe just touch on that it's quite a fragmented industry, the kind of businesses that they're looking at, these family-owned timber yards and distribution companies that serve a particular region, and maybe only that region, whereas Big River is trying to, I think, establish themselves on a national scale, which to me kind of makes sense. If you have B2B customers that probably have projects, the bigger guys operating right across Australia, whether it's Sydney, Melbourne, Brisbane, Perth, having a supplier that can service you in all these markets, really kind of would make sense to some of the bigger players.
Yeah, so it's probably a two-pronged answer there. On the acquisition side, firstly, very much bolt-on M&A has been a part of this process for Big River since the listing journey, and we expect it will very much continue going forward. And a lot of that is driven by the localization of the buyers in a certain area. So if you're looking for building supplies and you're a tradie or a formwork or something in, as an example, in the south coast of New South Wales, what's happening in Perth is probably completely irrelevant to you. You need that local exposure and that local expertise and knowledge of what you want and when you want it. So local supply chains do matter. And we think there's also a major succession issue, which is very common across a lot of industries with baby boomers a lot of the family members may not want to take over these small but profitable private businesses anymore. So there's a lack of succession internally, and Big River becomes a very logical buyer, and that has been proven to be the case over quite some period of time. What Big River can do on the second part of that answer is they have infrastructure and a procurement and supply chain process in place themselves, where they source a lot of their products and their timber from certain overseas markets. Many of these suppliers in areas they've had very, very long-term relationships with. So by bringing in further bolt-on M&A, more sites, we're able to further leverage their own supply chain. And whilst they can distribute across the country and provide the quality products to who needs them when, they can do it with a local service offering, which I think is very important.
And maybe if we just kind of move on to the other side of the ledger, risks, the business. I mean, it's been around for 100 years, so it's been through more than its fair share of up cycles and down cycles. And I mean, probably not too relevant to them, but every time you open the paper these days, it's another home builder that's kind of gone into liquidation or whatever. And they can't kind of exist in a bubble. These high interest rates are not good for building construction in general. So maybe just, is the kind of current macro environment a bit of a risk you're cognizant of? It's going to affect different players to different extents. And yeah, I guess, M&A, while maybe bolt-ons, they can also cause a lot of headaches if one or two do go wrong.
Yeah, so I suppose on the macro side to start with, very cognizant of that. And, clearly it is a building, construction and materials business. A building supplies, I should say, business. So there is end cycles there, the housing cycle and whatnot, and very much they've got exposure to that, albeit they've got diversification across different areas. So yes, we are off the peak of housing, and everything you read, it's clearly getting worse going into calendar year 24, I should say, as that backlog seems to appear to be washing out. But on the flip side, it feels like this is a short-term, I suppose, gap before the fundamentals kick in again in terms of what we think about long-term tailwinds. There's a fundamental shortage of housing in Australia that's getting exacerbated every year. Net migration has picked up significantly again. Rent increases are driving a significant part of overall inflation now, which is extremely worrying. So there's a lot of factors there that, in our view, and certainly generally consensus in the market, is that the housing it will bottom, and then has to be major home building continue over the period of the next 3 to 4 or 5 years. And we've seen federal government initiatives come out trying to address that over policies over the next little while as well. So very much there is cyclical a nature to this business. I would say that's on the housing side. We do see, and the company Big River have commented, as others have, around the resilience in the commercial market, which seems to be improving. There's also the infrastructure sector, which that continues to boom and boom and boom. And there's always an infrastructure project that needs further building supplies. So there are different dynamics there, but very much we feel like the price that is provided to many of the companies in this particular sector, they're priced like the bottom of the housing cycle is here to stay, in our opinion. But we certainly think that over a medium-term view, will certainly revert back to growth once again. The second part of your question around M&A, yes, it has been a successful bolt-on experience to date. I suppose the way they think about managing price on the way in, they look at averages rather than paying, top dollar of any particular point in the cycle. So we think that certainly helps. And they've got good muscle memory now of integrating business as well, putting them into their supply chain, and then having them continue to grow over the medium period of time. So we think, yes, they've proven themselves, but that certainly doesn't make them perfect if and when they do future acquisitions.
Okay. And then I guess if we kind of, look forward as we move into kind of calendar year 24, they're going to be reporting results in February, more results, in August. If we're catching up again, November next year, what are you kind of looking for Big River to deliver over the next 12 months, or some of the kind of key highlights you're going to be watching out for in the next 12 months in terms of results or updates from the company?
Yeah, sure. So obviously there's the result periods that you've mentioned, and we'll be looking at them very closely, particularly the first half result coming out of what has been the market dynamics that I've just suggested. So we want to see how resilient the company's been in that space and where they're getting their profits from. Equally, I think the company's been a little bit, in terms of historically, their track record of M&A in the last little while has slowed down a little bit. They've publicly said that they will continue to be a key part of their strategy. So we'll certainly be looking for incremental bolt-ons that may happen over the next 12-month period. I suppose thirdly, there is the new CEO. He would have been in the seat if we're sitting here at about reporting season early next year. He would have been there in about 12 months. He's putting his own lens on the business and seeing areas where he thinks can identify potential further investment to get returns over the next period of time. So we're sitting here in, as I said, 12 months from now, we would expect a lot of that work that he would have done and understanding of the business has flowed through. And we're probably looking at a housing cycle and the rhetoric around that housing cycle, in my opinion, which is far less gloomy than it is today.
Okay, great. Well, yeah, I'll link to any of kind of John's previous presentations in the show notes below. Yeah, if you didn't catch him live, that's a good a good incentive to come to some of our live conferences, since we don't record them to incentivize people to come along. So hopefully maybe we can get John back again at one of our events next year. But a company who hasn't presented a coffee microcaps down through the years, strangely enough, given we've had so many, is MaxiPARTS, another business that also with a kind of a long listed track record, and even before that, I think it's also a very well established business that's I think flown under the radar a bit, but I think is starting to come back more broadly from kind of new management in there. But maybe before we get into it, quick overview of the MaxiPARTS business. In one sense, it's actually not too dissimilar to Big River.
Indeed, yeah, I was going to make that point kind of to start with, that albeit completely different products that they're distributing, they're both capital light, they've both got nationwide presence, and they're both distributing niche and end products to a certain customer base in the B2B trade sector in an efficient manner. So whilst Big River do building supplies and materials, what MaxiPARTS do is it's in commercial aftermarket parts for buses and particularly for trucks as well. So thinking about that very simplistically, if you or I, we need a new car battery or something like that, we'll probably go to Super Cheap Auto and grab whatever's on the shelf there. And as long as it fits, as long as it works, all we particularly care about is, and I'm generalizing here, is that it works, what's the most cost effective, and how can I get it in my car as soon as possible to get me back on the road effectively. What MaxiPARTS do is the same effective concept, except it's for big trucking companies and a lot of individuals and small businesses out there that own trucks. So as an example, you've got a Kenworth truck, you're on a trucking operation, and you need a new axle, you need a new steering wheel, you need new suspension, whatever it is. You can either go back to Kenworth, the original OEM, as if the truck's under warranty, but typically they're not under warranty, and you just need something that is fast, reliable, and will get you back on the road and effectively save you any sort of lost revenue opportunity as soon as possible. So that's where MaxiPARTS come into the equation. They've got relationships with all sorts of suppliers and manufacturers of replacement aftermarket parts overseas. They bring them in. They've got 30 odd stores across the country and the ability to deliver to customers, and they do that very efficiently and across many customers on a daily basis.
And maybe we can talk about the investment thesis for you guys around MaxiPARTS. Actually, is it last week? I think I saw they announced an acquisition, which has been a kind of bit of a theme of theirs as well over the last little while. So yeah, maybe when did you guys, get invested? Is this one of the kind of longer term holds or one of the newer term ones?
So it's a business that's been around in its, I suppose, the operation itself since about 2001. It was part of a bigger listed company called MXI. It was a company that we watched for many years. We know the space well through other listed businesses, and we thought there's a capital light business, which is MaxiPARTS, and there's a capital intensive business that was in this parent company. Pleasingly, we were hoping and waiting to see them divest this capital intensive business out of the parent company. That occurred in 2021, 2022. And what was left was the capital light distribution business that we were particularly attracted to. So for us, that was the catalyst to invest, and we did so. And we're now substantial shareholders, and we feel like we're only on a couple of years into the journey there. What has happened subsequent is they have made a few acquisitions in the space. I might highlight why they've done that, in the sense that it was a smaller business at the time, but they wanted to grow and get a proper foothold. And there was certain elements missing within their wider offering in some respects. And the management team of that, of MaxiPARTS, who are now in place now, they identified opportunities where, for instance, they didn't have a good exposure in Japanese truck parts. They had really good American and to a lesser extent European, but the Japanese truck part market is very big here. They wanted to get into that particular space. Equally, they've made some acquisitions in the last 12 months of an adjacent product, which is called Forge, which is an adjacent business, I should say, Forge, that does workshop consumables. So a lot of the people that are fixing the trucks that come off the road, are off the road, replacing axles, etc. They've got consumables in their mechanic workshops. So that was a logical extension, similar customer base. And just of late, in November, actually, they've raised capital and bought effectively the last major independent provider in the WA market, which they didn't have a major exposure to. So putting that all together, they've now got a very material business, and arguably the biggest out of some of the listed players in that space in Australia. And I suppose some of the tailwinds I talked about at the start, we look to identify industry tailwinds when we invest. I think there's some very key ones that underpin MaxiPARTS specifically, and I wrote a big article on this called "Houston, we have a trucking problem," which people can look up on Livewire if they want to. But the fundamental thing behind that is the average age of a truck within the Australian market. I'll use the word truck to describe a big truck as opposed to a little one. The big trucks in Australia, the average age is 16.3 years, and it would take us more than 10 years of record sales to get that number back down to 14 and a half. At 16.3, that is one of the highest in the developing world in terms of the average age of the trucking fleet. So when you have older trucks that are continually driving more and more kilometres across our roads, delivering more and more freight, you're going to have more requirement for replacement parts, more requirement for servicing, and therefore that's a major undercurrent for a business like MaxiPARTS, which has seen and proven to date that has been resilient through economic cycles. And we certainly believe that that will continue to be the case, underpinned by the fact that we've got an aging truck fleet that is driving more and more, and we continue to need to replace parts, and we're not refilling the pipeline with new trucks fast enough to offset that.
And risks that we should kind of be aware of or are cognizant of. I guess like with any distribution model, you've got kind of the fixed cost base, and pushing more volume through it is good, but the minute volumes ease back, it can be quite a nasty shock on the bottom end as well. But is that something you're worried about, or is it more the integration of these kind of, as you said, they just raise capital to buy something? Is it more the integration side of things that's kind of maybe not keeping you awake at night, but keeping your finger on the pulse there closely?
So it's the latter, because they have done quite a few acquisitions of late, and execution risk for this business, in my opinion anyway, in our opinion, is very much kind of the key focus going forward over the next 12 to 18 months. They've done a good job of integrating their first acquisition, but now they've done two in a short succession. and it's key that they bed these down and do so efficiently to not only generate the cost synergies that are potentially available, but more about the revenue synergies going forward. In terms of the other risks, look, it is a very resilient market, and the competitor set, it seems, is quite rational from what we can understand out there, and everyone. I'm talking about the kind of major three players within this space. They tend to stick to their kind of niches a little bit, and the three of them combined, there's still a lot of white space in terms of what's out there for them, those three to, I suppose, jointly go and target. So we think that rationality in the competitive set will hopefully continue, which should set them up well. And as I said, it's all about execution risk for MaxiPARTS going forward from here.
Yeah. And just one other risk, maybe, I think it still seems to be cropping up from time to time, you know, supply of parts, logistical issues post-COVID. I mean, people, I think, kind of forget, you know, China didn't really open up until, you know, February, March this year. And, you know, some businesses say there still is a bit of a hangover in terms of, you know, getting all this kind of stock back up to the levels that they have like pre-COVID. And obviously, you know, for distribution business, you know, if you haven't got the part they want, they'll go somewhere else, and, you know, you kind of miss that sale and you don't get it back again. Have they said anything about those kind of COVID hangovers? Is that kind of washed through their industry system, and kind of, you know, everything is back to kind of pre-COVID normality?
It very much seems like, of the two businesses that we've discussed today, I'd say that was far more of a factor for Big River in the timber supply side of things, which, you know, we can all remember. There was no timber on shelves in Bunnings, as an example. So Big River, actually, on a side note, managed to be one of the key suppliers throughout that period of time, and they've certainly benefited from holding on to customers throughout that COVID period and beyond. For MaxiPARTS, yeah, obviously freight and shipping and all those factors blew out for everyone across the world. The flip side of that is freight rates have come down significantly. Shipping rates have too. The requirement to plan as far ahead, yes, it's probably not back to normal, but it's certainly reducing, and the cost to do so is reducing as well. So we don't think it's as big a issue now going forward, and we certainly think that MaxiPARTS are as good as any within their industry to be able to manage that, and they've done so accordingly to date.
Yeah. And then, yeah, again, if we kind of put the 12-month time frame on it, you know, what are you going to be keeping an eye out from MaxiPARTS over the next kind of 12 months? Is it really the integration of these new businesses, or is it, you know, kind of more results focused in terms of, you know, they've got everything together now, and the synergies are coming through, and the kind of profitability is improving?
So I think firstly, I really want to see them bed down these acquisitions, which I've kind of touched on a little bit. Where we want to see them as well is, that's probably one factor, but just in the core operating business as well. They, as I said earlier, it was part of a wider conglomerate parent, and now that it's on its own, you can see the margin profile of this business is far lower than it has been historically, far lower than its most like-minded listed peer called Supply Networks. It's been a very successful business over 20 plus years of listing. It's had an amazing track record, great business, price like one too. We think if MaxiPARTS has the ability to improve its own margin internally, which again comes back to execution risk, that there's the ability for significant multiple re-rate over time. What gives us confidence to date is we're seeing the returns on capital improve. They're now in the double digits. So we're certainly seeing that trajectory start. From our point of view, it's BAU, it's execution risk, but it's also understanding the points of interest when it comes to their operating business and how they're actually generating further margins from what they've got today. So there's a few factors there, which will certainly keep us busy. But in terms of economic resilience, I don't think this industry, I think this industry is far more stable than others. So you're probably not going to see headlines like we do in other sectors, on the paper that certainly might take ours and others' attention. It's very much a resilient sector, so it's very much an internal focus on what they're doing over the next 12 months.
Okay. Rob, thanks very much for joining us. It was great to catch up, and yeah, I think two interesting ones for different reasons, and we'll be keeping an eye on them over the next 12 months. And yeah, if anybody wants to find out more about NAOS or the various listed investment companies, what's the kind of best way to do that?
So yeah, obviously sign up on our website or inquiries at naos.com.au. We put out plenty of content. We do a CEO Insights every week, which is an independent set of quotes that we put out from what we think is interesting across the world from CEOs, which people might find of interest. So yeah, so if you want to reach out, sign up on our website or shoot us an email, and we'll certainly come back to you and happy to chat with anyone. So appreciate you having me on, and thanks for your time.
Yeah, thanks. And I can recommend the CEO Insights. I'm a subscriber myself. There's always some great little tidbits in there, I have to say. It generally comes out on a Friday, I think, Rob. Is that right? Does it come out on a Friday?
Yeah, Friday. I don't know. Friday morning, we always aim to get it out. So
Yeah, no, I can recommend it. Read it myself. Rob Miller from NAOS, thank you very much.
thanks, Mark.